Hey guys, so what we're going to do right now, we're going to talk about the Mortgage Broker Act. Now, we call it as a Module 1.3, and it should be your third chapter that you're going to be doing on your week number 1. It's also your chapter 2. So this is just for the GOBC modules, right? It's easier for you to follow. So this way you know on which week you're working on. So let's get in. This is not a very big chapter for the exam purposes, but you need to understand everything about your legislations, and you have to know about the act, and you have to know who is your boss. So this chapter is all about those kind of systems that's going to be part of your daily work. Okay, so first thing first, you have to understand who is a mortgage broker. On the exam, they're always going to test you. They're going to give you at least one question. They will ask you who is considered to be as a mortgage broker or who needs to have a license. That's what this question is all about. So basically, when somebody lends another person money for the full amount, for the partial amount, but if you're working with money, you're lending people money, then that person needs to have a license. So that's going to be a mortgage broker. Number 2, holds himself or herself out as by the advertisement. So if you put an ad, says, I can help you to get financing. So anything to do with mortgages, then you'd better have your license. You have to be a mortgage broker to advertise yourself that way. So carries on behalf of the business of buying and selling mortgages. So again, if you put yourself out there as a business who's helping people to get the mortgages or to sell the mortgages, then you'd better have a license. Now, for the exams, they want you to know this one. If in any 1 year of your business, if you receive a commission of at least $1,000, then you have to have a license. So basically they say, look, if you're helping somebody and without getting paid, then you don't need to have a license. But if you get in any amount more than $1,000 for helping somebody to get a financing, then guess what? You'd better have a license. Look at the next one. It says during any 1 year lends money as a security for at least 10 mortgages. So if you are a very wealthy person and you have so much money in your pocket and you says, I don't even know what to do with my money. So what you can do, you can lend people money, right, as a mortgages. But if you start lending more than 10 mortgages in 1 year, then even if you're super wealthy, you still have to get your mortgage license, okay? Carries on a business of collecting money secured by the mortgages. So anything to do with selling, buying, assisting people with mortgages, then it is a mortgage broker and you have to be licensed. So my next question to you will be this. So if you have to be licensed in so many departments, who will be fully exempt? So who doesn't need to have a mortgage license? And the first thing that should come to your minds, it should be anything to do with governments, right? So that's how it usually works. So in exceptions, a license under the Insurance Act, okay? Banks, credit unions, trust companies, they don't need to. Basically, if you're going to be planning to work for the bank, specific bank, then those people don't need to have a mortgage license. And I always tell you guys, if you're planning to just go and work for Royal Bank, then don't come to our course. Don't take this course because that's not good for you. Because whoever works for the banks, for the credit unions, they're working for them specifically, and they're not allowed to tell their clients if there's any other better mortgages out there, right? So as a mortgage brokers, we work with all of the lenders. Okay, person acting for the government. So again, if somebody works for the government, they will be exempt. A trustee in bankruptcy, a liquidator, a lawyer in the course of his business. We'll come back to this one. I'll give you a little bit more examples. But basically, if it's a lawyer who acts in the course of his business, he will be fully exempt. Person lending money on land to provide housing for the employees, government-related stuff. And a realtor who facilitates the sale of a vendor take-back mortgage. So I want to make sure that you understand. So realtors, if they want to help you with mortgages, then of course they have to have a mortgage license. But this is the only type of real estate agent who will be exempt if he just facilitates. So that means he's not assisting, he's not helping, he's just helping you basically to get the transaction done. A vendor take-back mortgage, something we're going to talk about after you actually finish all the math questions in there. We're going to have one specific session about the vendor take-back mortgage. Now, what is this? Is vendor's the seller. So that means you go directly to the seller and ask them to give you money. So if you're working for that seller who wants to give that vendor take-back mortgage to the buyer, then you can facilitate it, and that will be an exemption, so you don't need to have a mortgage license to do so. So let's do question number 1. So which of the following people would not be specifically exempt from the current registration requirements for the Mortgage Brokers Act. So that means basically who needs to have a license, who will not be exempt in this case. So look at option number 1. It says Sasha, a mortgage loan officer at one of the banks. And I'll stop right here. So if somebody works for the bank, so they're working out of the bank. So if you come to Sasha and she works for Royal Bank, so does she need to have a license basically? Does she need to get licensed through all the systems that we have in here? Of course not, because again, she works specifically for the banks, right? So anybody who works for the banks, credit unions, or the trust companies, they will be fully exempt. So she's going to be fully exempt. They say which one is not going to be exempt. That means who needs to have a license, so not her. Look at the second option. We have Jim, who is a criminal lawyer, and he helps clients out when in need by lending them money on the security of the property. So that means he has money, he wants to lend his money to his clients, and he actually collects $19,000 in fees. Now, my question is, what is his course of his business? Because if I look back at the definition, it says lawyer in the course of his practice. He's a criminal lawyer. So for that reason, my question is he will be fully exempt just because he is a lawyer? Of course not. And you understand that, right? So he's definitely going to be not an exemption. So that means he needs to have a license if he wants to lend people money and receive that much fee, right? If that was under $1,000, then that would be fine. But he received $19,000, right? So that's why it's not good. Okay, so that will be the answer, but look at the last two. Anna is a real estate licensee who facilitates. So that means she's just in the middle of the transaction. It's her client, it's her seller, and she's trying to help him with that lender take back mortgage. So that's fine. And the last one, Joanne, as an employee of the Ministry of Finance of British Columbia, government stuff, right? So definitely those two will be exempt. Okay, let's continue. So licensing systems. So when people are completely new to this license, a lot of times they don't understand what is the difference between a mortgage broker and a sub-mortgage broker. Now, in real life, we don't use the word as a sub-mortgage broker. So if you have your mortgage license, we're going to call you as a mortgage broker. But for the exam purposes, they want you to understand that the mortgage broker is your actual office. It's your brokerage that you're going to be working for or underneath your brokerage. That's what the mortgage broker for the exam purposes, and a sub-mortgage will be you. Okay, so look what happens. For the exam, you have to know as an office, as your brokerage, what can they register that under. They can have it as a corporation, they can have it as a company, they can have it as a sole proprietorship. So that means they can register that office the way they wanted to. So it doesn't really matter when it comes to companies, right? When it comes to mortgage broker. But when it comes to a sub-mortgage broker, so when they're referring to you, you can only have your business under your personal name. So that means you're not allowed to have a corporation, right, as a sub-mortgage broker, unless you want to open your office later. But for this, at this point, that's what they want you to understand. Okay, they will test you on this. They'll say who could be a sub-mortgage broker, and they will give you corporations, they'll give you partnerships, they'll give you all the other things. No, it's only could be an individual, which is a sole proprietorship. Okay, so for both cases, it doesn't matter which one you're planning to open. Of course, in the beginning, you will be a sub-mortgage broker, but you have to be registered. You have to be employed by the mortgage broker. So that means you're not allowed to work for yourself, right? You pass the exam, you guys are lucky, you don't have to go through all the other courses like real estate people do. But after you pass the exam, basically your job is to find a brokerage for yourself. When you find the brokerage, your office, right? That's when you're going to work underneath. So I call it as an umbrella, right? So if anybody sues you, you're supposed to be protected by your brokerage, right? That means they actually sue your brokerage too, right? But that's kind of an idea. So your brokerage is supposed to protect you, and you always have to be underneath somebody. So we have Dominion Lending, we have so many different types of offices out there, right? So for the mortgage brokers, if they want to have an active office, they must have a registered sub-mortgage broker. So that means they have to have at least one a sub-mortgage broker working underneath the office. Okay, so a lot of offices, when they hold money in trust, so if somebody brings money to that office, they have to have a trust account. We'll talk about this one a bit later. But if they hold money in trust, must file the annual financial statements to the register. Register is going to be your boss. We'll talk about him in a minute. And it doesn't have to have in prescribed form. So right now, just know that they have to have the trust accounts. If they hold the money in trust, they have to file the annual financial statements to the register, to the boss. Okay, so if the employment is terminated, suspension of the license. So what it means, if you don't have an office to work for as a sub-mortgage broker, then you cannot conduct the business. So you're not allowed to do the business unless you're going to be part of the active brokerage. Now, doesn't matter what type of license you're going to apply for. The fee is always the same. So it's $1,000. It's funny how it is in real life. In real life, it's a different number, but for the exam, it's still, they keep it as $1,000. License renewal is every 2 years. So every 2 years, you pay for your license fee again and again, okay? In real life, at this point, in 2021, the fees are $800 per year. So that's around, yeah, that's what that is, okay? But for the exam purposes, $1,000 for 2 years, okay? So the responsibility of a mortgage broker, so that means they're referring to your brokerage, to your office. They want to make sure that all of the books and records of the mortgage broker are accurate and up to date, which makes sense. Right? Make sure that all of the employees, that means all of you guys as sub-mortgage brokers, are registered. So that means you have to have your license under the Mortgage Broker Act, and make sure that you all informed of all of the relevant mortgage broker information and legislation stuff. Okay? So that's it. It's pretty simple. If you have this question, that's a lucky one. So the Mortgage Brokers Act. Now, when I teach my people, I always want you to have visual pictures because this way it's easier to remember things. So when somebody referring to the Act, think of it as God, right? Think of it as God of you guys, of mortgage people, right? So a Mortgage Brokers Act. Now, when they're referring to the God, think of it as something that is out there, something that is not really touchable, right? It's something that came up with lots of rules and regulations for you that you have to follow and abide. Like God come up with the Bible, says, you know, be nice to people, don't kill them, don't steal. It's the same kind of idea in here. So Mortgage Brokers Act is something that is out there that come up with a lot of rules on you guys. Now, but my question to you, when they come up with this Mortgage Brokers Act, for whose protection is it for? And for the exam, they always going to test you on this one. Is it for your protection as a mortgage people, or is that a protection of the public? For the exam, nothing is for your protection. I know it sounds really bad, but nothing is for you. It's always for the public protection. So all those rules, regulations, whatever they come up with, legislations, it's all to protect the public interest, not yours. Okay? For the exam purposes, they're always going to test you on this. And they'll say the Mortgage Brokers Act, what type of legislation that is. Is that a federal or is that a provincial? You have to know that everything with us has to be provincial. So everything is done on the provincial levels. So that's why if you go in British Columbia, there's one type of licensing requirements. If you go to Ontario, it's totally different licensing requirements, right? So every single province will have their own requirements. For that reason, our acts, our GODs, also going to be a bit different ones with different rules and regulation stuff. So provincial legislation that regulates the conduct of the mortgage professionals in British Columbia. Okay? So question number 2. Who is responsible for the ensuring that mortgage brokers meet the requirements of the Mortgage Brokers Act? So they say, who will be in charge? Because the God down there, he's not really touchable. He's out there, right? And because he came up with all these rules and regulations, somebody has to enforce them on you. Now, I haven't taught you this yet, but I give you a lot of different examples in here just to show you who do you think will be applicable to you as your boss, okay? Is that a real estate counsel boss? That's for the real estate agent boss, okay? Superintendent of the mortgage brokers. I haven't even explained you that one. Superintendent of the real estate, okay? Or is that a registrar of the mortgage brokers? So you have only one boss, and that boss, we call him a registered. So I'm going to explain you who that is. Okay, and he's the one who will be enforcing that act on you. Basically, the boss says, hey, you better listen to the God rules and regulations. Okay, that's what his job is. Okay, so this is the boss. We call him the registrar. You like my picture? Because this boss is pretty powerful boss. He's one of those, you know, not like real estate boss, like he's good. So this boss, we call him the registrar. He's responsible for the administration of the act. You see how it's in blue? Because that's exactly what they want you to understand. So if they ask you who administers, who enforces that act on you, just know that has to be the registrar, okay? So now this boss is a smart boss, and he said, look, I have a lot of things to do on my plate. Why would I do why would I do registrations on my own if I can hire somebody and let them deal with all these brand new people? Okay, so the duties performed, instead of doing it all himself, he delegated all those duties to the FICOM. Now for the exam, the FICOM is the Financial Institution Commission. This is an older version. Right now they call it BCF FSA. I'll explain all that stuff, right? So it's British Columbia Financial Services Authority. So right now, this is what we have, but on the exam, they still like to use the word FICOM. So when they use the word the FICOM, is the same thing as this BCFSA, right? It's the exact same thing. Unfortunately, my students go for the exam, and a lot of times they see the FICOM, sometimes they're gonna see this FSA, right? So let me explain what that is. So register says, look, I'm not gonna do things on my own. What I'm gonna do, I'm gonna delegate like registrations and giving the new licenses or removing the licenses. I'm going to give all those responsibilities to this FICOM. I'm going to call it FICOM for now, okay? So that's what he does. We'll talk about FICOM in a minute, but he's a smart boss. He delegates things away from himself. Now, this boss is a powerful boss. So what he can do, he can actually investigate you guys. So when he gives you the license, he says, hey, I'm not really happy with you. So before he gives you the license, he can investigate you. And even after he gives you the license, he can always investigate you too. And he can investigate you, highlight this one, under the criminal fraud. So if you do any criminal matters, he's definitely going to be on top of you. Hey, that's kind of boss we have. He can attach the conditions and restrictions to your license. He can even refuse to give you a license or take the license away from you. So that's the boss, right? He can decide what he wants to do with your license. He can inspect all of the books and accounts. So when I say inspect the books, he's not going to come to your personal house, but he'll come to your brokerage, and he'll definitely going to do the audit, and then he'll look at everything what's been done in that office. He can seize any relevant information. So that means he can come to the office, he can inspect the books, he can seize them if he wants to. He can freeze the trust account. So again, and every single brokerage, if they deal with money, then they have to have that trust account, so he can actually put a hold on that trust account, says, hey, nobody takes the money out of it until I figure out what's happening there. Decisions applicable to financial services of tribunal. So let me explain you this one. So basically, when somebody wants to sue you, and if somebody is after you, and if register wants to come after you too in some way, so basically he can never take you to the Supreme Court of British Columbia. You remember in the first chapter, we talked about different court system. Supreme Court is not for mortgage people, it's not for the real estate people. We go through the financial services of the tribunal. That's the court that all of our matters are going to be delegated to. So an exam of this is Supreme Court, not for us. Okay? And of course, this type of boss, can he take your license away? Of course he can. Okay, so you get the idea, right? So he's one of those strong bosses, you know, good ones. So this is your FICOM, right? This is the one I was referring to this one. So again, for the exam, they call it the same, like right now it's the same, right? So let's see what happens. So Financial Services Authority, that's a new name for that FICOM, right? So now it's BCFSA, right? Financial Services Authority stuff. Now, again, if they ask you what type of agency that is, nothing is federal, everything is provincial. So every single province will have its own regulations and legislations. So it's a provincial government agency. Think of it this way. For the exam, they'll ask you, they'll say, is that the Mortgage Brokers Act who created for you this FICOM or the BCFSA, right? Is that the act, the God of Mortgages created that for you? Just understand that with this. You see, the act has nothing to do with the separate organizations. You see, this FICOM, this organization is a completely separate entity. It's something that the mortgage brokers use, real estate people use that, and all the other credit unions and all the other companies use this FICOM for a lot of different matters. So for the exam, that no, Mortgage Brokers Act did not create this FICOM for you, right? It's not something that was created by the Mortgage Brokers Act. So it's a separate agency, right? It's been given discretion by the lieutenant government of the council to perform the duties of the register. So basically they say, the lieutenant said, you know what, you can perform the duties of the council, so you can do that. Registration extends to the credit unions, trust companies, insurance, mortgage brokers, and the real estate people. So again, everybody uses the FICOM, right, and governs the registration. So if they ask you, what's the main duty of this organization, is to, they're basically responsible for your registration. So after you pass the exam, after you choose a brokerage, they'll give you the documents, they'll give you the paperwork, and that paperwork will be submitted to this FICOM, right? So that's where it's going to go to, and they will give you that. Basically, they're going to look at your registration stuff, okay, instead of the register. So he doesn't do it himself. Okay, question. Which of the following statements about the Financial Institution Commission, which is FICOM, is false? Look at option number 1. It says FICOM is an agency of the provincial government. So far that's good. That administers the number of the statutes and regulations, including the Mortgage Brokers Act. So That sounds really good. They ask you which one is the full statement. Option number 2, FICOM's jurisdiction includes the credit unions, insurance, and the trust company. So that means they work with a lot of different other entities, and that's true. They're looking for the full statement. So option 3 and option 4, FICOM is solely responsible for the enforcement of all of the consumer protection granted by the Business Practice and Consumer Protection Act. Did we even talk about that before? Not yet. We'll talk about the Business Protection Act, but let's keep this one. Let's look at option number 4. Through the Register of Mortgage Brokers, FICOM governs the registration of the mortgage and the sub-mortgage brokers. So that is definitely true because that's exactly their duty. That's what they're supposed to do for the register, right? So out of all of the options, option 3 is definitely the one that kind of jumped at us. So it's kind of your job on the exam to figure out which one is the better option and which one is the true answer for sure. Right? So if you're not sure about something, just skip it and go for the next one. Now, what's the problem with option number 3? These 2 keywords that definitely shows you that it's a false statement. FICOM is solely responsible for the enforcing of all of the consumer protections. Do you see how strong that is? All of the consumer protection, solely responsible. There's a lot of other things that could be responsible for enforcing of the consumer protection things. Okay? Okay. I just wanted to show you this again. So what happens when you breach the Mortgage Brokers Act? So what happens when you do some wrongful actions, right? If somebody wants to come after you and say, hey, you screwed up. So what happens then? Right? So again, who can take your registration away from you? That's your boss, which is the register, right? So he can suspend or cancel it. He can ask you to pay the fine. Can he imprison you for the exam? Yes, he can. So he can definitely ask you to pay money for the registered trouble, and he can even put you in prison. That's what they're trying to tell you. The wrong party may file a civil suit against the broker. So against your brokerage, they might go after the whole office, basically. The bond may be required from each broker involved, and the registrar has the power to order the person who has breached the act to pay an administrative penalty. So on exam, they'll ask you for this penalty. And they'll ask you, so how much is the penalty just because somebody sued you, right? It could be up to $50,000. So question number 4, which of the following are the powers of the register of the mortgage brokers under the Mortgage Brokers Act? So now they're asking you which one is the power of the register. So remember the register, he's a powerful boss. He can do a lot of things. Look at option A, okay? The register has the power to investigate any complaints regarding the breach of the Mortgage Brokers Act. Even if it says any complaints, that's true because that's exactly what he does. He does investigation on you, okay? So A, so far so good. Doesn't help. Option B, register has the power to investigate a criminal fraud. Can he go that far? Yes, he can. He can go criminal as much as he wants to. How about option C? Okay, so far I know that's true. I know option 2 is true. Okay, so you see what I've done? So whatever doesn't have the B, I would just cross it off. So I know it has to be option 3 or 4. Option 3 already has option C, and this one says all of the above. So basically, I just have to know my option D. Okay, so option C, register power of investigation allow him to, or her to enter, inspect all of the books of the accounts and other records, and seize any relevant information from the mortgage broker. So that's true. Okay, but option D is the one that we have to really know. Okay, the register has the power to freeze the trust funds of any mortgage broker pending the outcome of the investigation. So again, can he freeze it? Yes, he can. So for that reason, it should be all of the above. Okay, easy. Question 5, the register of the mortgage brokers has the power to order that person to pay an administrative fee of how much. So if anybody sues you and if register takes his time on you, then he can actually sue you up to administrative fee up to $50,000. Okay, everything else will be, especially those ones, too much. Okay, so there's one more thing that you have to understand. So register is your boss. And he was created by your act, which is a Mortgage Broker Act, a god of your mortgage people, right? Now, register is the one who enforces that act. Now, we also have this voluntary organization, something that you don't have to be really part of. A lot of mortgage people are not part of this at all, and I'll tell you why. So, but for the exam, you have to know what that is. So, Mortgage Broker Association, so we call it the MBA of British Columbia, so MBA-BC, right? So, MBA is your Mortgage Broker Association. So that's a voluntary organization. And this is why we put your mother in there, Okay, this MBA in our mind is our mothers. Okay, so they kind of love you, especially this one. And what she does for you is two things. First of all, she enforces the code of ethics. Now, the code of ethics, we're going to explain you more in the module 5.1. That's where we're going to go more into details about the code of ethics. But basically, I'll show you a couple more slides about this one, right? So ethics is the science of the morals, right? The department of the study concerned with the principles of human duty. Now, it's funny how it is they actually won this definition. So if they ask you what is the ethics, remember to look for that science of morals, right? That's what they want. But basically, they say, look, we have a golden rule. Do unto others as you would like them to do good things to you. So for the exam, they'll ask you, so who is responsible for the code of ethics? Who wants to enforce that code of ethics on you? Is that the act, which is the God of mortgage people? Is that a register, which is your boss? Or is that the MBA, which is a mortgage broker association? For the exam, just know your boss and you, God, are not responsible for the code of ethics. It's not, they don't really care. As long as you haven't breached much things, then then they're fine with you. But the code of ethics, please and thank you, that comes with you MBA. So that's volunteer organization. You don't have to be part of it, but if you are, then they'll make sure that you abide by those rules. And what is this MBA does for you? What does this mother do for you? Why a lot of our mortgage people are not part of this family because they don't find much use of it. The only thing she does for you, she promotes your interests as a mortgage broker, as a professional. So that means there's a website where it says all of the mortgage broker professionals and your name will be on it. It doesn't cost much. They're supposed to give you some type of education. Most offices will be training you, but yes, you can find some education with the MBA. And it's only costs like $60 per year or something. It's not expensive, right? But then you can add to your business card that you're part of the MBA, okay? So for the exam, I want you to know just this one, who enforces the code of ethics. Just know it's not your boss. It's not your God. It's your mom, okay? Okay, so just a couple things about the code of ethics now, but make sure that you watch that module 5.1, of course, right? That's where you can have more of the code of ethics stuff and all the questions. So provides the guidelines to ensure all the humans' action are morally fair as lawful. Maintain the reputation of the profession of the eyes of the public, right? It's all about the reputation. That's what the code of ethics is for. Sets a standard of conduct reasonably expected of the members of the certain profession. So make sure that you stand out. You don't, when somebody says a mortgage broker, you don't bring that profession down, right? Don't put a bad name towards it. The highest duty is on to the public. So what I tell you from the beginning, that even your God is for the protection of the public. Your mom is for the protection of the public. Everybody's here, not against you, but they all towards the public interest, right? So it's the highest duties on to the public itself and not to you even client. Includes the golden rule, okay? So duties as a mortgage broker, so you have quite a lot of duties in there. Again, we're going to cover those duties when you get to that module 5.1. Confidential communication, right? So duty of discretion. So when you're working with your clients, make sure you keep all that information confidential to yourself. Don't just spread it out, the news. Duty of the professional courtesy and good faith. Disclosing all of the options. So again, you're not working just for your personal use, it's not about you, it's about your clients, right? So whatever is better for them, you'd better disclose all the options for them. And the fiduciary, which is the highest duty of care obligation to the clients. So that whatever is good for them, you're supposed to do that. Duty to advise fully, kindly, and honestly. So I kind of flew through this stuff. The reason for that, because we do have all that coming up for you in that module 5.1. Let's just do one question on a code of ethics. It's one of those newer questions that we see on the exam quite often now. Ethic is best defined as, and if you look through the question, something should jump at you already, right? It's that science of the morals that should be jumping at you right now. But if I look at all of the other options in here, court-based judge-made law. Now, you see, code of ethic is not as strong as you think, right? This code of ethic was enforced by your MBA, which is your mother's. And for that reason, it's not a judge-made law. It's not a very powerful law. It's not like you can lose your license because of that, okay? It's a voluntary code professional adapts through the membership. So again, it's not voluntary. Minimum standard of conduct prescribed by the Mortgage Brokers Act. Act does not prescribe you the code of ethics, is your MBA, which is a MUM, right? Mortgage Broker Association. So nothing to do with the act, nothing to do with the register. It's just your MBA who enforces that on you, okay? So this is interesting. So basically you have a full family. You have your boss, which is your register. Then you have your mother, right, which is your MBA, Mortgage Broker Association. And then you have your discipline committee. And that, we call it a dad, right? So you have actual dad in here too. But this dad, he is kind of even though he's part of the family, but he also works for your boss. He works for the register. That's what that is. So if register wants to come after you and he wants to discipline, he'll talk to you that first. But the thing is, for the exam, they're always going to give you a question. They're always going to test you who can do what, right? And they will test you between the discipline committee and between the register. And they will ask you, out of those two, who can take your license away, right? You see, your dad is your he just acts as an educator, you know what I mean? He's your dad. He just can give you a slap on the face once in a while, but he doesn't have enough power to take away your license. So just understand, he works for the register. He's part of your family, so he kind of likes you, right? But again, it's not a real dad, because all the protections, as you see, your mom, your boss, your act, everybody's on the side of the public in here. Act as an educator, not guilty until it's proven. That's why it's a super dad in there, right? But what can he do? So this is what I want you to understand. So what he can do, he can kick you out of the house. So when they say suspension of the membership privileges, basically they say, hey, you're part of this MBA, you're part of this, your mother's house, but you could be get out of this. So we can basically kick you out of there. That's all he can do. But he cannot take your license away. The license comes only with the register. So the boss is the only one who can take it away from you. He can reprimand and say, hey, you know what? You are guilty, right? And they're going to be publicly, everybody will know about that, right? So that's what he can do, pay the cost of the hearing so everybody can charge you for their time, and complete the educational courses. So he might make you do extra work because he works as an educator, okay? So let's do this question. Jake is a member of the Mortgage Professional Association. So that means he's part of his mom family, right? So he lives with his mom. And he has been found by a discipline committee to have breached the association's bylaws. So that means he breached something. Which of the following penalties are likely to be available to the association to impose on Jake? So basically, what can they do? Okay, discipline committee, that's what they're referring to. What can he do? Look at option A in here. Suspension of the use of the association member services. Basically, can he kick you out of that house? Yes, he can. That's option A, definitely he can do that, okay? How about option B, performance of the community service? I mean, your dad might do that, but do you think in our profession, somebody can come and say, oh, that's it, just because you breached something, you're gonna go and volunteer today and tomorrow and the day after that? Okay, we'll skip on this one, but no, they cannot do that, okay? Can he imprison you? So again, good question. You see how they combine the discipline committee and your boss, which is your register? Who can imprison you? Do you think your dad, your discipline committee, has enough power to imprison you? No, he cannot. Okay? So, but can he ask you to pay him something for his time? Yes, he can. So basically, if you look at the options, option A is good, right? Doesn't really help much. Option B is under the question in the beginning, right? But definitely between those two, I can tell that he can definitely ask for money, right? But he cannot imprison you because that's too much, and that comes with a registered job, right? So for that reason, you would choose option number 2, right? Only A and D, because that also becomes a false statement, okay? Nobody can ask you to do community services. Okay, so now we get into the fun part of it. It's something they would like to ask you for. They're gonna ask you a question about the disclosure requirements. It says, look, when you're working with your clients, should you disclose to them how much money you made out of the transaction? Should you disclose to them how much, any fees that come into you, anything? Should you disclose people everything? For the exam, this is what you do. Okay, your head goes up and down. So if they talk about the disclosure and say, should you disclose that? Should somebody gives you a gift, should you disclose that? This is what you do. They want you to know that everything has to be disclosed. Okay, so if I ask you, should you disclose? You always say yes to this, okay? So under the Business Practice Consumer Protection Act, BPCPA, you'll get used to this one. It comes up a lot, okay? Business Practice and Consumer Protection Act. Even nobody protects you, okay? Consumer Protection Act. So that means your borrowers are the one that will be protected by the Consumer Protection Act. It says disclosure be given by the mortgage brokers and the lenders to the individuals who borrow for the primarily personal, family, and household purposes regardless of whether the broker or lender is charging additional fees or expenses. So this is the first time, and this is the only time you're going to see regardless as a true statement. So what did they just say in here? They say, look, when you're working with your borrowers, the disclosure statement of how much they will be paying in the interest for the full year, how much the lender will be charging them, how much is the lender's fees, how much are your fees, how much everything, how much, all those fees that the borrower needs to know, it has to be disclosed to him. So must be given by the mortgage brokers and the lenders to the borrowers. And this disclosure under the BPCPA stuff, it applies to the primarily personal, family, and household purposes. So basically, it applies to all the personal loans. And it says it doesn't matter if you're charging an additional fees. It doesn't matter about additional fees. It's about any type of fees. You have to disclose that to your clients. So for the exam, even if they say regardless of whatever, that is a true statement because you have to do disclosure regardless of anything. You have to tell them everything. Okay? That's what they want to hear from you. Okay. So for the exam, you have to know 3 disclosures, okay? The first one is the disclosure to the borrowers under that BPCPA, under the Business Protection Practices Consumer Protection Act, right? So this is what that is, Consumer Protection Act. So they say to the borrowers, you have to give a disclosure of everything, especially the annual percentage rate. It will come up in here, right? So basically, when you get in a mortgage for your borrower, you have to let them know for the full year, the APR, which we're going to do math on, you'll get there, okay? And the annual percentage rate of the disclosure statements has to be provided to them up front so they know how much percentage they're going to pay in the interest for the full year. Requires the disclosure statements notice and the statement of the account must be given to the borrower. So you always have to do that. This is what they want from the exam. It always shows up on all of the exams. So they'll say how far in advance should you give that notice? 2 days prior to the borrower's incurring the obligation. So before he signs for that obligation, right, unless it's the two-day period is waived, but it doesn't matter. But 2 days, business days has to be before he signs anything, has to be given to him. Say, hey, by the way, that's how much commission you're gonna pay me, or not you, but the lender will pay me. This is how much they will charge you. This is all your fees you're gonna pay. All those disclosure has to be given to them. For the exams, this is the must to know statement too. It says does not need to be any prescribed disclosure form. So basically, when you disclose to the borrower how much money you're gonna be charging them, how much the annual percentage rate is, that could be on a piece of paper if you wanted to. Of course, in real life, we have real forms, but for the exam, they say it doesn't have to be in this prescribed form, okay? That's it. So this is the second form that you have to know. It's funny, in real life, if you ask any mortgage brokers about the Form 9, nobody knows this one. The reason for that is because most lenders will come under the exemptions where you don't have to provide this Form 9. So this Form 9 is a disclosure to the lenders and to the investors. That's what that's for, okay? So borrowers will get one form, again, under the BPCPA, okay? Could be on a piece of paper, doesn't matter, but you have to disclose to them how much they will be charged, right? And then this form is for the lender's protection, basically. And we call it the Form 9. In real life, you're not going to see too much of it again. So this is a disclosure to the investors and the lenders. Say, hey, you should know that this is the borrower's information. This is the property information. So basically, you have to disclose everything to them to protect the lenders and say, hey, should be enough information to disclose to you before you lend money to anybody. So are you okay with that information, basically, right? So again, disclosure must be given to the lender investor before he advances any money, basically, to the clients, right? Or the funds are paid into trust before the funds are released from the trust. So basically, before he gives the money, he needs to make sure that he's comfortable by giving those money. And in that form, we're supposed to disclose everything, all the information relevant to that transaction, right? So everything about the property itself, about the borrower, how much income he makes, and all the things, so they feel comfortable with this, okay? Mortgage broker must retain the copy of the Form 9 for a period of 7 years. So everything with us, when it comes to keeping the records, it has to be 7 years minimum, okay? Now, because as I said, most of the lenders will never get that form from you, and that's why you will never see this in real life, because all of them, pretty much, I don't want to say all of them, but most of them are considered to be as a sophisticated persons, and they will be exempt by this Form 9. I'll show you the list of the sophisticated people, okay? That's too sophisticated. So a mortgage broker does not have to provide a lender investor with the Form 9 if the lender investor is a sophisticated person. So if he's any of that category, which most of the lenders are, then you don't have to provide the form. And that's why I say in real life, you're not going to see much of this. So if anybody who works for the government, municipal corporation, if it's a saving institution, an insurance trust company, a mortgage broker acting as principal, so anything to do with lenders giving you money, a person registered under the Securities Act. So it's a short list on the exam. They're not really asking you about the list at all. They're just going to ask you sophisticated person. Are they going to be exempt from the Form 9? Yes, they are. So basically they say they have enough information, and that's what they call them sophisticated, because they are protected themselves already. They already have all that extra information from the borrower before they lend them money. And that's why as a borrowers, we fill up so many forms and so many credit checks and all the other things, because lenders are sophisticated. So they know what they're talking about, and when they feel comfortable, that's when they lend us money, okay? Now, this is the form that you're gonna be using a lot in this business, because this is the form of the conflict of interest. And that form has to be disclosed to the borrower, and it has to be disclosed to the lender. So the Form 10, that's something that we're gonna basically give to two sides, one to the borrower, one to the lender. Now this is the form. It says the Act places the equal obligation to provide the conflict of interest disclosure on both mortgage brokers, which is the offices, and the mortgage broker firms, and the individuals. So you and the office, both of you guys have to provide a form, and that form, it says disclosure must be provided to each person who are the borrower or the lender in the transaction, and the content contained in the disclosure should be identical regardless of the recipient. Disclosure is made by way of a prescribed form known as a Form 10. So as you see, the Form 9 and Form 10, those ones are the prescribed ones, so that means there's a specific form for that. But for the exam, they don't ask for this. All you have to understand is basically, because we work with the buyers and we're working with the lenders, you have to make sure that it's a transparent transaction. So both have to be aware of what's happening, how much each will get, how much the other one will charge you. So we have to give them that information, and that's called the Form 10. So no extra information that you have to understand. You just have to know who this form is given to. It's given to both sides. That's what you have to know. Okay, so both direct and indirect interest must be disclosed before mortgage commitment. So requires the recipient to sign the form acknowledging the receipt. So basically your borrower have to sign in the form, says, okay, I acknowledge, you told me things and now I have it. So what is the direct interest? So basically everything that is direct, something that we are aware of, the commissions, the fees, the bonuses, the rewards. A mortgage broker is a family member. So if somebody works, a mortgage broker who is a lender himself and who wants to give you money, you have to disclose all that information to the borrower, make sure that nothing is hidden away from him. So everything that is direct, everything is known, it has to be placed on that piece of paper and showed to the borrowers and to the lenders. Now, indirect interest is something that it could come up in the future. You might not even think about it. It's not obvious, basically, but it could be something like expected renewal fees. It's something that, you might not think of it now, but you have to disclose it even now before it comes in place. So, under the Section 14 of the Act, a mortgage broker and the sub-mortgage brokers are prohibited from making any false, misleading, or deceptive statements. Now, we're going to cover this in the different chapters coming up. We're going to have quite a big chat on that part. But just know that when you advertise yourself, you cannot, or you should not, you cannot mislead people. You cannot put a false information in there or mislead somebody. It's like the ad, they put this beautiful ad and then you get to the real burger, and that's how it looks like. So basically your job, if you advertise yourself like this, you better look like that, okay? So question 9, the Business Practice and Consumer Protection Act requires that the disclosure statements be given by the mortgage brokers and the lenders to the individuals who borrow for the primarily personal, family, and household purposes, only when the broker is charging the brokerage fee. Now, do you have any problem with these statements? You should have. If I say only this, that's kind of limited. That's kind of indication of the false statements, okay? Not only, okay? If the annual percentage rate is above 10%, it doesn't really matter. You still have to explain in the APR, the annual percentage rate, no matter how much, or how big or small it is. Not this one. The 2 days prior to the borrower incurring an obligation under the credit agreement unless the time period is waived by the borrower. So that 2 days should be jumping into, because that's exactly what they want you to know, right? only when the broker or the lender is charged an additional fee. So you see how that only limits things, and that becomes a false statement. So definitely option 3 is the one, right? So 2 days prior before they give you the money. Disclosure by the mortgage broker and the lenders under the Business Practice and Consumer Protection Act is focused on. So remember we talked about 3 disclosures. The first one is given to the borrowers under the BPCPA. And that is disclosure that has to be done 2 days prior, like we did in the previous question. This is the disclosure that has to be, it could be on, it doesn't have to be on prescribed form. So that means it could be given on a piece of paper if it has to be. And this is the disclosure that has to be given to who? It's usually done for the, is it for all of the borrowers, regardless on the purpose of the borrowing? You see, it's not applicable to the commercial. It's something else that we're going to use, but it's used for the individuals who borrow for the primarily personal, family, or the household purposes. That's the one that you have to choose. Okay? So who is a sophisticated person exemption applies to? 3 forms. First one is to borrowers under the BPCPA. Second one is a Form 9. Now that's done to who? It's to the lenders only. And then we have the Form 10 that's given to who? It's given to the lenders and it's given to the borrowers. So sophisticated person exemption will be applying to which one? It's definitely the Form 9. Because what is a Form 9? That's why we don't see this in real life much, because most of our lenders are sophisticated. And for that reason, they will be exempt, right? We don't have to provide that form to them. Okay, good job. Next question, if the mortgage broker has a conflict of interest with another party in the mortgage transaction. So I haven't explained you this question, but let's think about this one. So if you have a conflict of interest, so there's some type of conflict in here, okay? What would you do? Option 1, it says the mortgage broker must always remove himself from that transaction. So just because you have a conflict, must always. How does that sound to you? That sounds a bit too strong, isn't it? Removing yourself just because there's a conflict? I don't think it's the best option. Let's continue. Option 2, the mortgage broker must always disclose the conflict of interest. Again, very strong words, must always, but it says disclose. So when somebody says disclose, always, that should be a good statement in this case, that you have a conflict of interest. So your client say, hey, I have a conflict of interest here, so you know. But let's keep this one. Option 3, the mortgage broker is not obligated to inform any other parties of his conflict of interest. Now, this is where I want to make sure that you pay attention to. If they say you don't have to, you're not obligated to inform any other parties of conflicts, so you don't have to basically disclose it, that becomes true or false. It better say false. It has to be a false statement straight up because you have an obligation to disclose everything. Remember what I told you about disclosure part? I'm checking on you. Okay, that definitely becomes a false statement. That's not the one. So far it's between 1 and 2. Option 4, tell me if that's true or false. A mortgage broker must only disclose the conflict of interest if another party asks about it. So just because they haven't asked, that means you don't have to disclose it. Do you see what I mean by this? So for that reason, option 3 and 4 is definitely out. They have to be out. So between a 1 and 2, which one is a better one? I already showed you too bad. But option 2 is definitely better because you don't have to remove yourself from the transaction, but what you can do, you basically have to disclose it. Right? That's your job. And that's what they're trying to aim for. Next one, according to the Section 14 of the Mortgage Brokers Act, Mortgage Broker Act, mortgage brokers and the sub-mortgage brokers are prohibited from making what type of statements? And when we talk about the advertisements, what you're not allowed to do? False, misleading, or deceptive, irresponsible, unethical, intimidating, no, that's not that one, okay? Deceptive, malicious, or aggressive. Which one did we talk about before? It's definitely false and misleading stuff. So again, we have a separate chapter just on this part itself. It's quite in detail and we have to talk about that stuff because you're not allowed to mislead people in any way. Question 14. In return for the commission, a mortgage broker arranges a mortgage transaction in which another person is a lender. Which of the following does not apply? So some people will read the question, they're like, I don't get it. I don't even know what they're asking you for. So basically when you're working with a lender, they're asking you what type of form you have to provide, what's true, what's not true when it comes to in regards to lender on the side of the transaction. So, but let's pretend we understood nothing from the question. All we know that it's not a true statement that they're looking for. So what we're going to do in this scenario, you're going to look through all the other choices in here. You're going to go through all the options in here and see, so what can I do? Okay, let's go through option number 1. It says the mortgage broker must provide a written disclosure statement to the lender prior to any advances being made. So they say when you're working with the lender, you'd better provide him something in writing, disclosure, prior to any monies being given. So far that sounds good. Written disclosure, we never discussed that, but just because it says prior to any advancements, that sounds pretty good to me, but I'll skip this one. Okay, let's pretend we don't know this one. Okay, option number 2. And I want to make sure that you pay attention to details. So option 2 says disclosure must be given in the prescribed form. Now, we already know that a lot of forms don't have to be prescribed, especially by BPCPA, right? As specified by the Mortgage Broker Association of British Columbia. So who is a Mortgage Broker Association? Is that the act? Is that a register, which is your boss? Or is that your mom, a Mortgage Broker Association, MBA? So do you think the MBA or the disclosure statements has to be written by your mom in any way? Do you see my point in here? So if you pay attention to who they're referring to, that will give you a very good indication. So in this case, just by looking at option number 2, I already know it has to be false statements because I know that, first of all, it doesn't have to be prescribed, and second of all, it's not prescribed by your mom. Mom does not come up with any forms. She just enforces the code of ethics on you. Okay, so option 1 should be true then, right? So yes, as long as it's prior giving the money, you have to give the disclosure to the lender, right? So usually form 10. That's good. Option 3, it says the funds are paid into trust. The disclosure statements must be given prior to the release of the funds from the trust. That sounds really good. And option 4, it says the disclosure statements must contain a disclaimer that states that the register, which is your boss, right, of a mortgage broker has not approved the information statements of the mortgage broker in any way. So basically they're saying, hey, register is not responsible for your disclosure, right? It has nothing to do with what you say in that disclosure statement. So he's always himself out of that transaction. Okay, but do you see why option number 2 is false? Right? Do you understand that? Okay, so last part of it about trust funds, we talked about it briefly, but yes, when you're working with a brokerage who collects the money and they want to keep this money in that brokerage, then they better have this trust account, basically, trust funds. All mortgage brokers that have hold money in trust, part of their mortgage broker practice, must maintain a trust account, and they have to file the statutory declaration that the mortgage broker did not, okay. That was shaky. So the last part of this chapter is about the trust funds. We already talked about these funds a couple of times, basically saying, hey, if your brokerage deals with money and they want to hold this money in the brokerage, right, on behalf of your client or whatever, so they need to have this trust fund, so trust account basically for your clients. Now that trust account has to be only one, not for each client, but just one in the brokerage. And if they haven't filed or declared that, yes, we held some money on behalf of the clients, and if they haven't created the trust fund, they could be faced with the criminal charges. So they have to have that trust account, and it has to be disclosed on a yearly basis how much money they've been keeping in those trust funds, right? So they have to do that. So you have this question, which of the following statement is a false statement? Look at option number 1. It says real estate licensee are prohibited under the Mortgage Brokers Act from arranging a vendor take-back mortgage on their clients' transactions. Now people look at that statement and say, no, that's the truth. So they're not prohibited, they're allowed to, right? So watch for this one before we get to the next one. So don't just jump the gun saying that that's the right answer. Look at option number 2. Only the mortgage brokers who handle the trust funds as part of their practice must file the audited financial statements. Only the mortgage brokers who handle that, they have to file those audited financial statements. So that's option number 2. That could be false. How about option number 3? A trustee in bankruptcy does not have to be registered under the Mortgage Brokers Act. Now that's an exception. Remember we talked about the exceptions, who doesn't have to be a mortgage broker. Right, so anything to do with the trustee of bankruptcy, that's true. So far, this is the only one true. Okay, option 4, a mortgage broker who files a statutory declaration that the mortgage broker did not handle trust funds that should have been held in the trust during the previous year may face criminal charges if the information is inaccurate. So far, those 2 are the true statements. So go back between option 1 and option 2 and tell me which one is definitely false. So did you figure out which answer you want to choose in here? Is it option 1 or option number 2? Which one is a false statement? Now, can I explain this option number 2? So basically, you see in our industry, when it comes to real estate offices, every single office must have a trust account. They have to, because they're dealing with the deposits. They always have to have money coming in and out, right? So for that reason, in real estate, it's a totally different world. But when it comes to mortgage brokers, so your offices, not all of the offices will have the trust account. Not all the offices will be dealing with money. So for that reason, it says only the mortgage brokers who handle the trust funds as part of their practice must file the audited financial statements. Now, that is a true statement, because if the offices, even though it says only, and that's why I kind of brought up your attention to this, but not all of the offices will have those trust accounts when it comes to mortgage ones. So option 1 is a false one. Why? Because as a real estate agent, that was one of the exemptions. You're allowed to facilitate, you're allowed to help your sellers with a vendor take back mortgage as long as you don't get paid for that. So here it says you are prohibited. No, you're not, right? You're allowed to facilitate. So that's it. So that's your chapter 2, 1.3 module. We've finished this one. As you see, it gives you that nice picture. So by now you should know who is your act, right? Who is your register? Who is your MBA? So who's responsible for things? Discipline committee, can he take your license away? So think of all of those options, because you will see it will come up in all of the next chapters coming up to you. Okay, good job. Let's go for the next chapter.